Good day, everybody. Brian here at quantlabsnet.com. In this video, I think this is pretty groundbreaking. Just so you know that Claude 4.1 Opus came out a few days ago, so I started playing with it. I've talked about Maven or Magnus, the agent AI, which is pretty good. But I think that's still early stages for it to start to mature to start really banging out good code. Nonetheless, I'm here to show you quite a bit of coding, not coding itself, but talk about it. There's going to be two versions here. I'm going to show you the Streamlit applications that came from a Word document, and the Word document is the executive summary of all the suggestions. So let me show you that. That process has not changed for those who have been watching me for a while. Um, so let me just take you over to the Python portion. So in here, I'm just going to load up LibreOffice, the exec summary document. So this is the document created by all my other older uh, Python scripts that go through looking for optimal futures and options. So all that gets generated from 40 different instruments. I've talked about that numerous times. So that has not changed. And you can see here, it's going to offer allocation, what's the best instrument for both options and futures. Hopefully, for those that took advantage of my half price sale, uh, hopefully you're getting a lot of good use out of it. And you focus on the micros market, you'll be doing okay. This executive summary here comes from this. So what I was able to do is I was able to generate my Streamlit application here, and there's two versions here I want to show you, just to show you the difference. These are brand spanking new um, LLMs. Okay, the first one was generated by the Opus 4.1, the Claude. Okay, so these are both Streamlit applications in Python. So the first one here is we want this one. So I want to show you the difference. It's stark. Like the difference between this one and the second one was generated with the Qwen 3 coder, which just came out a couple of weeks ago, and that's been pretty good. I've been using up this time the 3.7 of Claude with reasoning. So this one is now 4.1 Opus, and this is like night and day difference between the two, what's generated out of those two LLM versions from Claude or Anthropic. So the usual, we're starting at a 50,000 portfolio. Um, we have a cash reserve here, and this is all done by the AI, by the way. So it calculates all of the cash reserve, everything I'm about to show you. It's going to have four assets, 25% expected return over the next 4 weeks. So that would bring me up to about 12,700 dollars in return. So again, this is the overall chart. Again, all generated by Claude 4.1 Opus. Okay, so here's our positions that we're focusing on. We've got here cocoa, gold, E-mini, and natural gas with the appropriate strategies that it recommends. Iron condor, bear call spread, bull put spread, and an iron condor with the allocation among 15,000. In this case, I did not ask for percent expected return, but in there you'll see that there is the availability of looking at it from Sharpe Ratio. So these are all of the available options. And again, here are all the standard metrics here. So a couple of new ones. Well, we've always had implied volatility, expected Sharpe Ratio, profit probability. Okay. As I said before in my previous video with the Magnus, it was so advanced that I didn't ask for it, but it was trying to backtest, build a strategy. I mean, the prompt was fairly generic, but I passed it through this super prompt thing, and then it went out of its way to backtest whatever it came up with, and I saw it right in the output. It was trying to back test until it hit 67% win ratio. So here we're working with a profit probability, but just regarding Opus, or sorry, Magnus, is how advanced it was. It was really impressive from a Chinese LLM. I mean, Chinese LLMs can be really good and pretty. Well, next one will be Chinese based. So there's some of those things right now. That's the overall portfolio. And again, those are the appropriate strategies for each instrument. So in here, we've got strategic analysis. Again, we have Cocoa here. We could appropriately choose one of these as well. So let's say Iron Condor, and it'll give me all the standard metrics. So we got take profit on this position, weight allocated, as I showed earlier. Here's the spread cost of an estimate on the upper end, lower on the put and the call. I didn't ask for that, but just did it. Calculate. It's advanced, right? So we can expect from a lot of these AIs. Max profit, max loss, stop loss. And now this is where it gets pretty wild. We've got our option payoff diagram created. 6 months ago, this was hard to generate. Now here we are, let's say 8 months ago in August, but it's really impressive. So here's the overall 4 week performance. It's estimated. Again, remember we're on August 9th. So right there, August 9th. So we expect to get profit now, a P&L in dollar amount up to here, up till early September. Like this is how really good it is. And as always, I got to remind myself to state this. This is just for demonstration purposes only. Performance not guaranteed. Blah 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 blah. All right, so we've got all that. That's pretty cool, right? And then, as I said, we can choose off any of these right here. So let's do gold, okay? And that one's going to be a bear call. So this is the iron condor for gold, okay? So let's say if I went with the bear put as it suggests, or bear call spread, a little better. I might have done better with Iron Condor by the look of it. Yeah, I would have gotten better results. So again, I'm just showing you this for demonstration purposes. But if I went through each of these strategy types, let's say a long straddle, what would my return be? Um, take profit of 5,000 versus let's say with the bear call. So you can see here, if I went with that, the long arbitrage, or sorry, long straddle, I would have gotten better return. So I would have done better, but nonetheless, I went the lazy approach for demonstration purposes only to show you this. So again, we have all the different instruments. We can calculate all the different types of strategies and get all those standard metrics. And again, that's with a 4 week forecast, right? Cool. So here's the individual instruments as well. So here's our Cocoa. Here's our payoff diagram as well, the price analysis with the projection or the forecast. Recommended strategy, Iron Condor with expected return 20%, risk level being medium. And here's our P&L allocation at 10K. So here's the different ones. So I guess what I showed you before, it's kind of already done that. So it's calculating that the probability of profit Iron Condor with a risk reward of 0.54, which is not strong, but considering based upon, and everyone asks, how do you calculate that? I've just shown before the processes where we're using real world um, futures data from the broker, which in this case is Interactive Brokers, plus we're just doing a little option chain data analysis, maybe 2 days, because that's what it can do. If I had a big account to calculate option chain data for the next, I don't know, 3 months is the optimal, the accuracies of forecast would be much better because it comes down to the predictability of what option chain data give you. That's the nice thing about it. So there you go. That's with the Cocoa. Let me show you gold here as another one. Here it's giving you bear call spread, expected profit 15 to 25%. And again, it gives you probability of profit and best case scenario, worst case scenario. I mean, that's pretty good. Again, this is a more advanced LLM that we're using. So I can show you the other ones as well. I think actually, let me show you the E-mini here. E-mini can be impressive. So the E-mini's a bull put spread. Let's see that one. Okay, so the E put spread, in this case on 50,000, we allocate, uh, or what would our, I can't remember our allocation. Doesn't matter. Anyways, so here you can see here, if we do this strategy, uh, bull put spread, we've got annualized volatility, implied volatility going into the future at 16%, 16.2%, which is kind of not too far off of the annual volatility, which is kind of low. We don't want to have a volatility rate of more than 15. Okay, it's higher risk. Yeah, you want to keep it within a certain threshold, and that's part of the prompting that I've got, and I'm pretty good at calculating that now. So here we have monthly standard deviation, uh, volume premium, and the volume uh, percentile. Sorry, that's got to be volatility. So here's the payoff, here's the target, and this is the projection it's giving you, okay, on the price. So the recommend strategy we're looking for is a bull put spread, bullish forecast with a defined risk. Again, expected return 15 to 25, medium risk. Okay, so these are the other ones as well, other strategies as well. So that's the ES. Okay. Um, And then everyone's going to go on about back testing historical. I've said it before, I've said it again. I would always put the effort into allowing the LLM to do the back testing, okay? Because why, as I keep saying, why would you want to spin your wheels on back testing the old way when an AI can typically do it? I was just reading, somebody sent me an article on how the data engineers in banks, hedge funds, and the like, their salaries are dropping. This is why. But yet, if you're a portfolio manager, your salary is going up. So when you're able to use AI, like I'm showing you and have been showing you for the last few months, it is clear as day that those that put more emphasis on the trading, knowing how to forecast with historical drawdowns on top of implied volatility, meaning going into the future, your salary is going to go up. The more accurate you can do it with more predictability, you'll be highly more valued at a firm than being some coder in a back corner somewhere. Because we're at a point now where the AI does this. So enough of that. Here we have year to date. We have here different periods we can go back on the back test. So let's say year to date. Here we have our portfolio mix. So this is assuming all those four instruments right here using those four types of strategies. Okay. This is pretty killer. Look, 44% return on a back tested with all the combined strategies and the appropriate instruments. Volatility is super low. This is low risk when you think about it. Again, the AI is doing all this. So that's at 11.94%. That is pretty killer to get you a 44% return since the beginning of the year. And that is stellar. What are you getting on your portfolio? Are you getting 44%? Are you getting, it just, I don't know what I mean, my portfolio guys are giving me, and I should be thankful I'm getting 1% after Liberation Day from President Taco, right? But look, you got the Sharpe ratio now at 3.68. I've said this before again and again and again. Um, the Sharpe ratio is key, okay? If you want to go into portfolio management, make a lot of money, serious money, and we just got a report that these salaries are going up because of doing exactly this. So now you got your Sharpe ratio, 3.68, and hedge funds and whatnot will die if you can bring back a Sharpe ratio of 2. But here we're at 3.68 on top of a pretty good win ratio of 57%. And again, all of the AI is doing that. Okay, so here's our historical breakdowns and within the industry tolerance of 15% drawdown. That's pretty killer. So again, see here the Sharpe ratio. Now this is where I can get interesting. If I want to just focus on the best producing um, instruments, just E-mini on the S&P in gold, we'll get a different output, a different result. So look at our monthly returns by strategy. Okay, so this is purposely designed, and now with Claude 4.1 Opus, this is even more advanced. This is crazy. So here we have a portfolio mix. So if I look at, I don't know, we're gonna just focus on the bear. Let me just try all strategies here. So, or better yet, let me just get rid of Cocoa and this one here, natural gas. See if we can. Um, don't think. No, I could put a request in the AI to adjust this to automatically update that, but I haven't done that in this particular version of this app, which is fine. But it would be much higher if it was just uh, gold and the E-mini. That's it. That's all I traded. Be much higher. Anyways, so that's pretty good. We have here Iron Condor. So all our Iron Condor volatility drops. Return is not as strong. Let's see the directional. Total return at 65%, 17% volatility. That's still fairly low. More risk because you'll have a higher drawdown. But a win ratio is much higher, 58%. That's pretty good. Um, just see if anything can happen here. Let me just try this. So if I get rid of these two, let's see if this will do anything. Okay, let me just try directional. Yeah, so yeah, it keeps all four in place. Again, here you also have your monthly return heat map. So you can see, well, I don't think there's a real theme here that's consistent, with the exception of maybe right now in August. If you were to put money on corn, agriculture products, they will generally profit because it's going into harvest season. So there is that predictability with that one. Anyway, so that's pretty cool there. And then you got all strategy. So 47% return, 14% volatility, which is really low. A little slightly higher with a drawdown. I'm okay with that. That's pretty good overall. So that's the back testing, risk management. So this is very, very interesting as well. Here we have our Greeks. Now, again, that's why I strongly urge you to take the course that I got at quantlabs.net.com under the courses tab at the top. This is why you need to understand this stuff because you understand the uh, call it next level down on the math front, and now you can calculate all your Greek analysis, which goes deeper, measuring the sensitivity on pricing and all that. And that's something that is really, really powerful as you know it. So here we have something new, something very new right here. If we have a black swan event, so that means market uh, just blows up, things crash, and like our Liberation Day, thanks to President Taco, that's what we're talking about. Those kind of scenarios. I didn't ask for that. Or what happens if you have a a volatility spike? What would happen? And so you can see already. Again, this is part of the advanced AI LLM. You can see already what's the overall impact if we have these type of events. Black Swan will lose 15K if we have implied spike on volatility, 3,200. So we kind of got some pretty good calculations there to protect the overall portfolio as is. And here's the probability of all this happening as well. So they predict a 1% probability rate based upon the data I fed it. Again, futures option and option chain data. The option chain data, I keep going on and on about how important that is. So that I've not seen yet with the 4.1. And again, I can use this source code as the model and then bring in a new set of assets and go through the same type of analysis if I want to. So here you got the risk concentration because you truly want to be diversified in these uncertain markets the way they're going. I personally think it's all propped up right now and they're just putting out fake it till you make it kind of thing. Again, we have that correlation matrix, which is pretty handy to have, and all that fun stuff. Okay, so let's check it out now. Okay, so we have our optimization as well. So here, maybe just let me just see if we got that famous button. Okay, we re-optimize. So this is what we're talking about, what I said earlier. So this is with everything as is, okay? So we have our cocoa, gold, E-mini, natural gas with the appropriate strategies. Current allocated by the AI with a $50,000 portfolio. Here's our current percent al- uh, current percent weight allocation, optimal allocation. Okay, so this is what it's probably thinking it should be, and it's optimal. So higher concentration on cocoa. Don't ask me why. I could probably dig deep to find out, and all that. So again, here's our expected returns. That's the current, and then there's the optimal or optimized. Here's our efficiency frontier analysis. I haven't done that yet. Again, that's part of my course, right? So again, no. Okay, so pretty powerful right there. So here's our variety of optimization parameters. Okay, so here's our min, position size, max, what would happen if we had a risk ratio, risk-free rate, let's say at 5% for now, confidence level as well, and just re-optimize. So what I'll do is I'll just take out this, see if it, so it's completed the re-optimization, new expected return at 25 with a 40% minimum risk. Um, so it still hasn't taken out the ones that I've clicked off. Anyways, that's okay. I can always modify that, reiterate with new requests in it. But to be honest, I'm really happy with what I'm seeing here. Again, people are going to ask, where's the source code? Where's the source code? The source code is going to be in my Quant Elite membership. God, I've got everything I've been doing on those on the file share for that membership all since January. It's about 50 projects now combined between the C++ and the Python. So this is the overall Streamlit application for, as you can tell, for research. Now, remember, this was generated using Opus 4.1 from Claude. Okay, so let me go back into, where do I want to go? Okay, so I'm going to run now app 2. So what I just showed you, I want you to see the difference between a really highly optimal, highly rated, highly advanced AI LLM like it from Anthropic, the most and latest, greatest one from Claude 4.1. I do believe as we're waiting out for this new ChatGPT 5, uh, I've read in documents that they are trying to target and match the performance of Claude 4. So that's why I do believe why Anthropic brought out 4.1 to tell open AI and say, hey, look how good we are. We're still ahead of the game. And your ChatGPT 5 will still suck because they do suck for coding. I mean, I do not recommend OpenAI for coding. It's just, it's not that good. The only one I would only focus on is only the ones from Anthropic. There's nothing else outside of Magnus because that one's really killer. And that's interesting. So this one I'm showing you is now from the free open source Qwen Coder 3. This is pretty good. This is actually really good, but you're not going to get the same things. So this thing came out and it kind of reminds me of what I got with Claude 3.7 with reasoning. Okay. So it's caught up there, but you saw the difference between 4.1 Claude and this. So here we got a 4-week performance forecast. Uh, it's just, I don't know. I just, it's going to be a totally different level of forecasting as well. Here's the individual instruments. We got a payoff diagram, strategy fork. That's it. That's all you get. Here's some current annualized applied volatility, range bound. Um, some of the other metrics are clearly missing here. So should I even spend time on this? Probably not. Okay, and not only that, but you saw that in this pull down, I got not just the instrument, but I could also get another set of other strategies. So I can go through those and say, no, 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 hold on. This gold bear call is okay, but let me check on the long directional if that's going to give me a better forecast. And usually it can, and then that enables you to have better projections using the other simulator or whatever you want to call it that was generated by 4.1 Claude. Big difference, and just the difference between those that don't want to pay for this versus the open source and free. Just paying for like not a lot of money, you're probably going to add on probably quite literally potentially thousands of dollars in profit with better insight. So here's our strategy analysis. Okay, again, generated by Qwen 3 coder. Nothing wrong with it from a free perspective, but it's just this is all you get. Okay, portfolio allocation. You know, yeah, it just doesn't have the same level of functionality you get with. I mean, this is not good. Okay, like it's not letting me see the different time frames. It doesn't allow me to see individual instruments based upon the back testing. So important. Like like if people are that, I don't want to say cheap. Um, I don't know. It just you get what you pay for, as I said, right? And then we get the risk metrics as well. So this is more like trying to be like Claude 3.7. Nowhere close to what Claude 4.1 is now giving. Okay. The only one I can probably think that's going to beat this is probably something like a Magnus. Okay. So that's now the difference with these Python Streamlit apps. One generated by Claude 4.1, okay, Opus, and then the other one, or the free open source one from Qwen 3 coder. And it's okay, but to pay for it, you just get way better results. And again, all the source code will be made available to my Quant Elite members. If you're already on my website, please ask. It's going to go up in price because we're very close now to live trading it. It's because we're refining our workflow to generate these programs, these apps, and be able to generate quite a bit of live trading now. Okay, this one's very important. Okay, so what I'm about to show you now is the C++. Okay, so what I did was I took all of the one found in the Python Streamlit and the four strategies and the type of strategy to use. I just fed it into again the 4.1 Claude without a GUI, graphical user interface, and just said make it a command line interface application. It was pretty advanced. It actually built quite well. Magnus is still way behind here. In fact, where I had to abandon it. But here, Quant 4.1, man, it's good, and you get less errors with it as well for both Python and C++. This is unbelievable. What I'm going to show you. So you can see here all the standard headers and C++ files. Okay, so that's all the source files. But this is where it gets kind of exciting because I didn't ask for this. But I did say, please build interactive brokers plumbing for both market data and for order execution. And this was specific for Linux. So I'm on obviously Ubuntu 22 Linux. And instead of it choosing the TWS, didn't assume I was on using TWS on the Linux desktop. It actually generated code on to work with the gateway. That's a surprise, okay? So let me just see if I can show you the README here. So, okay, so, oh, I remember now. Okay, here we are. So, again, all this code is going to be put up in the appropriate folders for either C++ or Python in the Quant Elite. But this is the exciting part right here. Is if I show you the README file, okay, in this, right here. Voila. Download gateway. Okay, so this is now the interactive brokers gateway. Okay, this is the thing that interactive brokers is miles, well, probably the only one of the only brokers that can give you software that will run in Linux. Okay, not a lot of other competitors are going to do that for you. Along with interactive brokers is global, and on top of that, having futures and options available as well in one broker in one account. It's unheard of. Anyway, so you can see here we got the instructions on how to download the IB gateway. So I am going to separate this out from the TWS with Windows because it's a real pain in the ass. That's a trader workstation. But you can see here we can make the file executable. If we have the desktop version of Linux, most likely not. Remember, this is through a WSL on Windows. And then we can also run the headless version of the IB gateway. Pretty powerful, right? So here's the advantage that we get with this. So now we have the ability to run everything in Linux using the IBKR gateway. On top of that, if you decide to, I don't know, travel, be one of these nomad kind of people, put it on a secure cloud environment. You can do that, okay, and just log in and remote into the Linux environment for the live trading. By the way, it's a hacker's delight, but you have to secure it. But this is where it gets interesting with this document, with this README. Not only did it show you how to download and set up the IB gateway, it's actually showing you how to configure it, okay, as well. So we got all our configuration, which is a real pain in the ass. Let's get that out of the way. We can run the deployment script and then showing you how to run. So if, and this is again, the AI's throwing all this stuff at me as extra. As I said, yeah, this is for a Linux environment. You can see here it's giving me all of the commands on how to set up if you use your Linux server remotely and how to bring it back. Okay. I don't know what screen is. I guess it's part of the GUI. You can also do this through tmux as well. So this is command line as well, and get that running. You got logs here, and then you can monitor everything running on Linux in a headless CLI interface. Check and log in by SSHing into your server from your laptop, wherever you are. Um, and then we have here all the different diagnosis for conflicts and the like. Again, I'm not an expert here. We can test to see if the gateway is connecting. Here we can install firewall for extra protection, security. Um, Here we got debug issues. And beyond that, if you want to run it in a Docker, this is, I'm not a big, I like the concept of Docker. The problem is I'm not good with Docker files. I'm going to admit it. Okay, Docker files are not my thing. But here with the AI, it's so advanced, it's able to generate the Docker file for you. Okay, so all that, and you can run this within a Docker environment, and boom, boom, boom. Okay, and it's pretty killer. Okay, so um, yeah, I don't know what more to tell you, but it includes all the security, all that, and how to set up a Docker container and have it run on a cloud environment. Pretty killer. All right, so there's that as well. So that is a big surprise that came with this. So I'm able to now generate that uh, with the AI with the latest and greatest Claude 4.1 Opus. It's really good. It's a kind of expensive, probably in line with the 3.7 reasoning. I think the reasoning has come down in price. So here, as part of all the file package I give in the Quant Elite membership, I'm going to take a strong assumption. You know how to use Linux. You know how to build and work with C++, and the same thing with Python. What this part of the challenge here is if you join it, this is one of the really good things is that you're able to do everything as if you're at some HFT shop. So practicing, getting it running, playing with the code, and at the same time modifying the for trading purposes, that's going to put you at the top of the game and build up your tech experience as well. Anyways, let's run this thing. So again, this is a CLI interface. So here it is. So we could start with, I don't know, $5,000. Okay. So in here, we've got our portfolio performance dashboard. I have not looked at and touched the code for interactive brokers, but I'm just saying that we're now at that point where we can run all of this in Linux, which is going to be less painful and actually more secure if you decide to put this into a cloud environment. So here we have what I've shown before, all the same stuff without the GUI. But again, all the strategy, all of the assets that or instruments that I've highlighted with the appropriate strategy, along with, in this case, the weight allocation and with the price, with the P&L as it would trade. And here we have a menu. So yeah, we can change all of these. So here we've got the portfolio dashboard, which is like, yeah, which is what I just showed you. We've got a strategy configuration. So here, this is what's configured with the weighting, entry, exit, and so on and so forth for each instrument and the type strategy. I'm not going to modify that, but I could, obviously. Back testing. So again, with what I showed you, the GUI is what you want with the Python. That Streamlit is very powerful. Instead of, like it's so scant going through a CLI interface, here you can see, all the basics, right? Initial capital at 5,000. We're expecting for the next 4 weeks at 2,400, 9.68 uh, percent return, current value with the risk and all that. And again, we have our weighted. This is not optimal, but you can manually set it with the price and the P&L. Okay, so I do believe we are looking at, is this back test? Yeah. So let's check. I believe the back test. That's what we're looking at now. So let's look at risk metrics. Um, I think that is the risk metrics. So let's go to execute trades. Now, the execute trades, I'm not a happy camper with this, but I think this is, um, I don't know if this is turning it on. Again, I don't know. I have to look at the code, but I haven't. But one day I will. I'm just showing you again for demo purposes. But it can live trade. I've shown other demos in Python if I wanted to do that. I'm only showing you C++. There's really no advantage with C++. I mean, there is an advantage with C++ because you get access to the gateway. I don't know how it works with Python and how the AI will handle that. But from a speed perspective, unless you're doing like high, and you're not going to do high frequency anyways on a retail broker, like interactive brokers. But if you did connect this into the CME directly, yeah, you can definitely do high frequency trading, but obviously you have to have a much larger $250,000 account. Here we're just dealing with tiny accounts. Again, we can get the market data if I connect it into the interactive brokers. So let's see what that does. So it's not doing anything because I don't think it's connected into the IBKR. So here we can do that right here. And that number is 8. So here, just got to put in your parameters, host. So let's say I'll go the default client ID. So I guess if I put my client ID as a test, and then the password, we're all good. I will take a huge assumption that will connect into your live trading account, not your paper trading. So beware. Actually, um, so here you go. 4001 for the gateway, 7490 for the TWS paper. So maybe, I don't know, maybe would they have a paper trading with the gateway? I don't know. I have to look into that. Maybe somebody out there knows. Anyways, that's what we can do there. That's to connect into the TW or into the interactive brokers. Again, I'm showing you the market data. I think that would change once you're connected into interactive brokers. So let's look at number 7. So here, this is our portfolio optimization and just the metrics there, current allocation, optimal allocation. So, you can, I believe, manually, so you can manually change your weighting. So that's the optimal, what's calculating right here, uh, if you want. But again, you just put in the AI prompting what you want. And then we've shown you how to connect an IB and then exit. So that's pretty powerful. Okay, so I've shown you from an executive summary of all the strategies types to choose for all the instruments that give you optimal return out of the 40 as of today on August 9th. From there, we can look at what looks good, what doesn't, and as I said, if you're using the one generated by Claude, you could actually look at independently on each instrument and then look at a particular strategy type to see if that strategy type will beat performance-wise with the suggested one. But it will also factor in, or you choose which one you want, factoring in implied volatility, historical volatility, and the drawdown as well. Those are the two top things that most people need to look at. The problem there is that a lot of people won't factor that in, but from a portfolio management, you have to. You have to look at those are your top two parameters to look at. What's going to give you the lowest implied volatility on top of which one has the projected lower drawdown as well. And these are all fairly safe considering with the AI from Claude, we're able to see percentage on the negative impact if we had Black Swan, or if we had a 50% spike. I mean, I didn't ask for that, but I got it with the Claude AI. That's powerful. Can you imagine what the an improved and new version of the Chinese one would give you with the agent as well? But we're just moving along really fast. I'm interested to see what the quality of output will be from the new ChatGPT 5 when it comes out, and it will be expensive, I'm sure, but I'll test it. But from what I'm seeing with the attempts from Meta and OpenAI, they just don't have it compared to what Claude offers from Anthropic. And the thing is, with that in mind, it's pretty obviously that Anthropic want to be the best LLM out there for code generation or vibe coding. And it is. And you look at the reviews, usually it will say, if the reviewer knows what they're doing, they will say that Claude is the best one out of all of them. And from my experience for the last 6 months, I can verify that as well. Anyways, enough of that blabbing. So let me go back to just to do a summary here. Okay, so if you go to my website, quantlabsnet.com, we've got our free ebook on high frequency trading with the infrastructure and like. You can get that if you want. You can also click on learn to get that. Now, the courses I've mentioned here are very important to understand. This is what I'm referring to here. Because we have now a few number of people on it, because we had a half price. This is where you want to start, regardless of your coding level, if you're a coder or not, or from a trading perspective. You need to know that because to get the most predictable level of trades, especially we're going into with a market with no clarity and most likely a high level of volatility, you're somewhat able to circumvent yourself from that. Getting these kind of metrics from this kind of AI and be able to focus on those instruments that look really good historically and be able to project out with option chain data and project a better potential return. Again, that's all projected. That's all demonstration purposes only. Okay, that is that. Okay, and now we can generate both the C++ pricing engine if I want, and more surprisingly, with a Linux-based interactive brokers gateway. That is awesome. Okay, not the TWS. So it's all one environment, and as I said, you can run it remotely in a cloud environment. That's pretty powerful. Okay, so the other thing that we've got is the course, and the other one that I do not put on the website is my Quant Elite. And that's going to get, if this thing starts to pan out, it will get pricey. Okay. And that's pure coding. There's really no hand holding when it comes to if you know C++ or Python. Also, you got to kind of be very comfortable in Linux as well. If you're interested in that, just reach out to me. I have a get in touch button here on the website at quantlabsnet.com, and you can query away and ask your question or whatever, and then you'll be talking to little me via email. Okay, just so there's that. All right, so thanks for watching. Hopefully, this is a very exciting next step with the new Claude 4.1. I'm very curious to see where the ChatGPT 5 will be. Something just tells me it's not going to be as good uh, from compared to Anthropic, because that's why I think they brought out 4.1 just to put out a warning shot to uh, to OpenAI saying, yeah, we're still better than you, no matter what you bring out. Version 5. They did that when one of the major, I think it was on Google I/O, the same day Anthropic held a press conference on all their latest generational LLMs on version 4. So they're very smart in this. And as we're on the verge of OpenAI ChatGPT 5, I do think that that's why Anthropic brought that out, just to say, hey, F you, we're still better than you no matter what you bring out. And it shows because this LLM version is very advanced. I'm like, wow. And it doesn't cost a lot. Anyways, we'll leave it at that. Thanks for watching. Have a good day.